Howdy there. DayTraderRockStar here. With a review video of today's boot camp. I almost called it bootleg boot camp. And, kind of taking a look at some of the... We'd like to look back at the charts and kind of do our practice for the day and see what we've missed, see what we've got and what we could improve on. And I like doing this. This is my type of research. I like doing. So I want to do a little bit with you also because it's important to see the the setups. The best thing about to carry on my rant today, I was kind of on a roll there, talking about how important it is to wait for that setup. And we're going to go over and just kind of show that. So welcome back if you're still out there. We did a boot camp. We're actually in the midst of a 3-day boot camp. Started day 1 today. It's going to go on until Thursday. Tomorrow it's going to be a fun day, Fed day. So people can still get involved in it. Just head over to Day Trading Radio. You should see a pop-up come up when you go on to DayTradingRadio.com, and there's a link on the pop-up. It's a pop-up. Maybe if you don't get the pop-up, you might have a pop-up blocker. But that's, I think, the only way to really get in now. It's a secret way. Or do, I forget. I don't know. You might be out of luck. You might be out of luck. The email, rpm@daytradingradio.com. It'll send you the link to get in. So if you're out there, you want to get part of the boot camp, email rpm@daytradingradio.com, and he'll send you the link. All right. So that's what we're going to do. Well, futures are closed right now. A little fact. They close at, now they close at 5 o'clock, reopen at 6 o'clock. They used to close like at 4:15 and there's all different ways they were closing, but now it's back to a 5 o'clock close, reopens at 6 o'clock. So it is 5:45. It's 5:45. So we might even get some trading done tonight too. So let's go back here. And I like just to back it up. We could go either way, but I'm just, looking at these things every single day. It's very easy for me to recognize a divergence. And remember what our divergence is. Our divergence is you're just looking for a change, and it's very important not to have too many lines up here. I only have the one line here, and again, I kind of went over that today for those out there not familiar with stochastics. Stochastics have 2 lines, typically a K and a D line. And again, the K line represents your look back period of how far you're going to get the data to put into the formula. And then the D is the moving average that's placed on top of the K, and it smooths it out. And the D is actually the result of the moving average on that. So we call that the signal line, and that's what I use. So it's a much smoother one. You can see when I cross it over, you can see a little squiggly line that's chopping all around if you can see it on the camera. But that's because I have it transparent, and I put those transparent. And it's much easier for me to see a divergence. Like, if I had all this, it's very hard to see. So I really recommend just using the signal line, which is the D line. And again, you're looking at pivots. Pivots or divergences are going to be major pivots in a chart. And a pivot is just a move from a move down to a move up to a move down to a move up. So these divergences happen to, usually give us a nice pivot in the thing. You could say there was actually one right here, not to crowd the thing up here. And some of these are going to be harder to see. But when you do just say, all right, I have a choice to make. I could wait for a very good divergence, which is a high-angled you would know a good divergence. A good divergence typically is inside of a nice channel. It's on the lower trend line. It has a good reversal candle, and then it has an angle. The second high is above the 20, and it's usually above 10. The angle is above 10 degrees, and it could be up 20-degree angle. Just a nicer. So that kind of, sometimes you'll even see a fake fast little candlestick. You won't even see the stochastics bend down, but the price will be down, and that's a super strong divergence because it doesn't even affect the underlying momentum. It just never even affected, and it's usually good to go. So, even you might say, well, what's the characteristics? You could definitely see the high or low there. So that's all I'm looking for. It might not be the best one, but the majority of the time, even if it is, you're either going to get the divergence or you're not. That the divergence is a higher low with the price making a lower low. So you have to say, yeah, that's true as a divergence, and look at the move it made from that. And each one of these divergences, you're getting those typical moves. Now, let's go back here. We actually had a sell side divergence. Someone asked in the room today, is there sell side divergence? I said, yeah, and I didn't want to come across being too much not paying attention to the short side. Today's, the basic fundamentals were identifying divergences and showing you the concept of your entry, your stop, your first target, your rotations and stuff like, and that's basic. You could apply these to the short side of things and stuff, but there wasn't any really short divergences today, except at the end of the day, and I think we did point that out. It was right here on the move on up to the VWAP and a trend line and a divergence. Look at that. And look at this right here. And it did move down off of that. And of course, that was right at the 350 murder algo area, which is kind of a time frame. You could get some volatility in it. And this also came out of a this came out of, this came out of we were looking at a possible bull flag on this one too, because we had these stochastics up here above. It was hanging right at the 80, and this was starting to get down. And at that point, we're holding 20. And we said, we're going to watch this for a break above the recent high and then turn into a divergence. And this is typical of, especially at last, when it gets really, really choppy. This was a typical flag. The flag pole has to pull away from the 20-period moving average. That gives you that really good strength. Then it takes time to come down to the 20. And as it's coming down to the 20, you want the 60 to be above 80, preferably above 85. The higher, the better. The rotation back here, if the faster this gets down to 80 and this price is above the 20, this comes down to 20 and the price holds above the 20. That's why it's called the 2020 bull flag. Then we tend to move higher off the flag here. Now, this is just a 1 minute time frame. And this is a pretty decent move, a rotation back up. And this is typical. What happened, we went right up against a VWAP. We're not going to get through that. And it's also a divergence. So you can kind of see sometimes what might play out if you watch it enough. Kind of anticipate some of these divergences. So whenever we see a kind of a trend down, we start to look. We know where divergences kind of show up. They kind of show up in this area, on the lower part of the channel line. Now you start to see some candles here. There's a candle and a lower candle. And this is kind of, I think I got this trade. It was 12. No, I was at lunch here. It was right before lunch. I took a trade. There was a divergence here. I mean, you could see this curling up, and even while it was curling up, if I zoom in here, you could see that dotted line right there. It was holding way off the dotted line. It was underneath here, which was really lower, which was at the last time it was down underneath the dotted line was back here, and that was considered, maybe it was here. It was considered a low. We just kind of drifted higher. We never really sold off here, and we spiked down again. Just kind of it was kind of a very hard thing to see. I don't think it was a worthwhile trade, but it does show a divergence there. And again, I always kind of fight for that, saying that mathematically or visually, it qualifies. The lower low on the price, the higher low on the stochastics versus that, and it is. Even what it is what it is. A lot of these are borderline. You're right on the 20 line. But again, sometimes when you're coming down here, you have to also keep an eye out for what we call that rotation play. That's when they all rotate down, and this one's been coming down, and it finally gets underneath that level, that 80, that 60 period. We're going to go over that setup more tomorrow. It was another, what we call a rotation play. And if you zoom out, you can see them a little bit easier. Like here, you can see something's probably setting up. Back here, there was something setting up. you'll see them all just come down. And so, well, we can't do anything right now, but when the market opens up, it might be interesting to watch that. But again, you know, there are some good ones and there's some sloppy ones. But when the market's in a rhythm and you're able to identify those, you have a much better trading chance here. Here was another divergence right here. And it wasn't, and that was about it. There was one, there was a triple here, and that was a divergence kind of right there too, but they weren't the best divergences. You know, there was one really great one, which was, I just came back from lunch. It was like it was right here. Yeah, I caught that one. That was the one I liked. It was about 150. Down here. So this, let me just go over this one because I don't want to forget this. I was reviewing some of these setups before, just reviewing, and I was looking back here and I was like, wow, I've seen, you know, this kind of just a kind of a ledge here and a lot of candles, a lot of tails that are coming down, lots and lots of tails, and you could see that Stochastics started to turn back up right there, and then you had that nice little candle from that point on. It, you know, it did give you a nice bounce off of that, but there was something that was holding up here, and it was a pretty steep one on the 14.3. Those two were, you know, again, the 14.3 is the green one, the 9.3, and these are fast stochastics. The 9.3 is the top one. I go from fastest to slowest. 9.3, 14.3, 44 fast. And I use this here, and that's my secret sauce ingredients here. This is the full. All right, I don't know if you have the full stochastics on your platform. I think most people do. It's 60-10-1. I don't know why it's not showing the mark there. And this corresponds with the 5-minute chart. And I find it corresponded with the 5-minute cash for some reason, almost exact. So I've never really changed it. That's why it has that 1 added to it. And I'm like, you know what? I remember when I came up with this. This was years ago, the 60-10-1. And seeing the relationship between the 60-10-1 and the 9, you know, especially when you see these rotations and this one's embedded. The 60 period, just watching this line is watching like the heart line of a patient. You know, you pretty much know the directional areas that it's looking short term, or, you know, that's your major trend, you know, for what we're trading, you know, short term trades. The 60-10 becomes really important because you have that in your directional, you know, flow. You have momentum on your side. You could get much bigger moves instead of dealing with this chop here. So it's great to have a great entry on the 9.3, Divergence 9.3, but it's even better when you have this is oversold and you have that chance of rotating back up. Now, the overall trend was weak here, so what you did get, you get the divergence move, but you didn't get the move here on the 60, and that was a flag right there. This was telling you something, and we know as a fact, Jack, we know when that gets embedded to the upside, and that rotates down, and the 9.3 rotates down, that's a bull flag. So doesn't it make sense if this is pinned to the downside, and then the 9.3 rotates up, that we have this bear flag? Now, it wasn't a 2020 bear flag, but just seeing this down here, and especially that crossover here, this was very weak. This never even got going. Even though the price was moving, this was not moving. And that's the internal momentum saying, hey, we're not shifting here. We're actually showing relative weakness versus the price. So it kind of gave you, it kind of could have been a red flag at that point to wait for that sell-off. The overnight trade, we'll just go back out here because a lot of people in Europe, when that European market opens up, there's usually some kind of reversal. But I'm just going to go through these fast. See, if this came down to that VWAP and you saw this big candle, I'd put that line on that candle, see where it is. See where that line is? The stochastics at the point of this flush here was already above that 20 line. That's what we call a hidden divergence. That's what we talk about, not getting the dip in it. But you see that suspect? That's a suspect right there. That damn candle came down and then reversed. And if you could just say, hey, take a look at that stochastic, that'll give you a lot of boost confidence on that. That was a sneaky little pullback, but the stochastics were able to identify. It didn't really touch the stochastics on the 9.3 or the 14.3, and you had the 5 minute on your side. So that probably was a great opportunity. But I think you had to really be focused on that as it's happening. But it would have been a good one. I mean, again, you want
tradeometer ES overbought, tradeometer NQ overbought.
Market just opened up here. So let's see where we are. And you heard that the tradeometer, let's go over that too. I'm reading the chat room there. But again, don't want to be too distracted there. But market opened up here. We're up 475. 475. Don't forget, Fed meeting tomorrow. Will we gap up ahead of the meeting? Will we gap up ahead of the meeting? Will we gap down ahead of the meeting? Do we levitate up into the meeting? Do we sell off hard? Oh, it's going to be so interesting to see what happens. My guess is we're going to be flat up till the meeting. Pretty much, maybe plus minus under 20 the whole day. So that's a kind of a good bet to make, an over under range. All right. So yeah, and the other thing I really wanted to stress tonight as we go over these setups is, yeah, there is short setups. We have to apply the same rules. And today was a good day for shorts. I mean, the bounces were good for anything, and that's what I don't want to just say. All right, the market's going down. I'm not going to look for longs, because look at the size of these. These work out fine. It just, you're not getting the full. You have to be in and out on your rotation, and that brings us to part whatever on the review here. Where do we put our stops, and how do you take profits? The easiest thing to do is rely on that 9-3 rotation. That way you're almost guaranteed getting a nice profit, and then you move your stop up. You're always going to have multiple contracts on. At least, 2, preferably 3 or more, especially if you're using the micros. You should be able to do that, because you're going to get nice moves. And if you have everything set up, you always want to have a runner, because if you have a 5-minute setup, it could give you a much bigger move. And it's easier to time too. I mean, a good 5-minute rotation, you could be in there until you get overbought and say, you know what, thank you very much, I'm going to get out with the trend line. You could get, these are big moves. That's 34 to 64, 30-point move. 30 points. That's $5 a point. $150 per one MES. Would a MES cost you $50? 3 times your money on a move like that. That's just if you had the minimum. If you had multiples, it's always great with multiples. So, but that's a great setup. Most likely you might not be in that all the way, but at least gives you the opportunity. That's why you got to get in the habit of using multiple contracts. Stops, again, you recognize that, you believe in it, you put the line goes in. Simple enough to put the it's simple enough to put the stop underneath it. In some cases you might get a pop and then a drop and then sets up again. You have to really, that's probably usually a good setup there. Cardano is down 9% to 47 cents in the last 15 hours. All right, let's check in on that. Just got an alert. Yeah, the momentum. Get the momentum on your side. Half the job is done. So your entries, simple, short, longer, short. Even if you're looking at a short and you wanted to short the market, you said, I wanted to short today. Short when you're, when you're overbought. Don't short when you're getting down to maybe a buy signal here, or you get a triple stochastic rotation. The odds are you're going to get a little bounce. The odds are you're going to get a rotation down if you bought it overbought. I mean, sometimes I hate looking back at it. I said, boy, this was kind of an easy trade all day. I mean, you could have traded into that trend line pretty much. We identified that trend line at 9:30. It already had 3 trend lines going on. I put it on the closing prices. I put up the extension here, and I said, "No, let's extend that." I come back from lunch. We're hitting that trend. We hit that trend line almost exactly. This we could even lift this up here, and it's probably perfect, right? Now, why did I have it originally at the other end? So that seemed to be almost a perfect. I think it was because it was down here, and I had that as the original trend line. But you know what? I want to just keep that like that because it is rock solid. That trend line was rock solid. We came right back up to it. Look at that. And the lower trend line is also great. Look at that. Oh, man. Like ping pong. And this is where we are right now. We're going to run into this trend line tonight. All right, so back here with you. Again, we're talking about some of the stuff here. Do I have that? I think I closed it. This is what I was talking about, the material and stuff. So if you didn't get this, I will send this out. I think a lot of people have it though. What do we got here? $5 is per contract on the micros. You could drop down to Rob's trades the Dow futures a lot, and Nasdaq's down to $2 per point. Russell 5. All the techniques we're going to apply them to this. When we looked at the tradeometer today, that gives you another thing that I want to look at one more time. Usually gives you some really good signals, and when you could kind of tell which the market ended up having that break. So we don't. Let's take a look here. I'm going to try to zoom it in. You could zoom this in. Let me see. Remember, this is a scalping tool, so you might see a lot of dots, but if we zoom in, you'll see that this is really not a lot next to each other. Here's the timing on it. So if you put your crosshair on it, you can see the time and the price. The alert comes out. And this is, say, yes, it's 40. 39, 739, 51. Wow. So that's over 10 point. Nice 10-point move on that here. Who knows how far these things go. But they go up. And again, it's all about the first rotation. So pay attention to this signal as you're looking for the divergences. Remember, if these things line up with a divergence, it's typically dynamite. Here we kind of have a blow off there, kind of rolled over there. Then it came back into, at that point, the reason there was no alerts here is because once it started trending down aggressively, it'll kind of go into a freeze zone here. Orlando says that Kramer's on. I have to listen to it after because I don't have it here. Hey Alexa. So sometimes she plays it, but I don't think she hasn't been playing it on the computer. I guess it's against the law. Since the 13th, 14th, 15th, the markets have been were not the best here. Let's take a look at the daily on that. Actually, let's take a look at the daily. That was just a 5-minute, but you can see here, big drop. Last 4 days. I want to just compare that with the Google. All right, we had that drop, and then the consolidation here. So I would take that back then. It's not anything special. Looked special before. There's that 1, 2, 3 channel line retest of it. We do have that going for you. Look at that. We did break down underneath it a bit, so. So we'll just kind of touch base with that, and I'll send this video on the way. But even the after hours holding 87. You see the rotation here. The rotation's getting closer and closer to that 80. This is holding way above 85. Price is holding the 20-period moving average. Still feels kind of like a pretty decent little flag that's setting up here. Maybe a little double. That candle up there was kind of kind of a sneaky candle to the spike up and then kind of settle back in. But I think we can retest that level. Now we don't have the volume like. Look at this. You can't even see it. So this is really, really not a good time to kind of analyze the market with no volume whatsoever. I mean, 18 contracts last. I mean, watch. Let's see how it works. But I wouldn't. You could probably move this market quite a bit with a decent size order. There's no volume right now at all. This is strictly my guess. We're all taking guesses and stuff at the different numbers. We got a 50, 75, and 100. That's what we're dealing with for tomorrow's FOMC meeting. What type of rate hike are we going to get? Now the market has already priced in a 75 basis point hike on Wednesday. They've priced in a 75. So this is now kind of priced into the market. What's priced in mean? Well, market has adjusted and compensated for a 75 basis point hike. So if we get one, do we get any surprise reaction on it, or is it already priced in? Now, if this is priced in and we get something else, then it might be a disappointment. If we get a 50, will it be a disappointment, or will they? It's really a tough call. So I'm thinking 75 is priced in. I think if we get it, we're gonna hang tough and we're gonna rally. I think if we get 100, then we sell off aggressively that day and maybe rally at the end of the day, but definitely rally the next day. 50, I want to say we sell off. That's my guess. And all right, so let's see. So let me pause this for now. I'm going to close up the video by saying that today one was a really good day. Thanks everyone for joining me here at Day Trading Radio. We're going to do day 2 tomorrow. Again, site will be open until about 10:30. Then we'll go over to boot camp mode. It'll be members only mode. So you have to be registered for the boot camp. There's a free boot camp though. I think that's I was going to just talk about the Boeing follow through tomorrow. We're going to look for Boeing to get a follow through day tomorrow. So I'm just looking at some scans. Well, I'm going to do a couple more scans, but you can see nice strength going into the close. Look at the candle today. Look at a lot of things. We'll call that a piercing pattern. We learned our candles today. Remember the 5 different candles. The piercing pattern is an important one. We'll leave it off with just looking at the piercing pattern fast. Where are my candles? Where are my candles? For some reason, then my candles are not on this one. It's totally messed up. All right, so we're looking at the piercing pattern here, which is the last of those piercing patterns. Gap down, all right, takes out the low of the previous day. And the important part is we close above the 50% body mark in the previous candle, or at least the 50% of the candle, I should say. So we can see that's playing out right now on the charts here. Right here. So again, you took out the lows. Didn't gap down below the lows, which is kind of a thing, but I just want to take out the lows and close 50% of the highs. We're not getting too complicated with this. This is a piercing pattern. We are oversold on the daily, the 9.3, 14.3. Nice, again, nice candle. I believe it was one of the big name houses, Goldman, or one of JP Morgan, Morgan Stanley. One of them had some good things to say about Boeing today. No. I think you get a nice run back up, and it looks very strong after hours. I am going to send out the send out some stuff also with this video, so look for that. All right, so see you guys in the morning on the video. I'll be here this evening until about another hour working with you. Maybe we'll get a trade off here, another trade. We did take one trade, and we'll see what we could do. So all right, so we'll see this, send this off, and we'll catch everyone in the morning on the boot camp.